everybody, it's me again, Buffy the Rate Slayer, and thank you for making our weekly Market Insight series a huge hit. Man, oh man, I truly appreciate your support. Welcome to our final episode of the September series, which is coming directly from the Capital Markets Trading Desk right here at SunWest Mortgage Company. This week, markets around the world frenzied and hit the record low. So let's dive on in, shall we? Global risk assets extended their sell-off as fears of faster inflation and global recession continued to rise. UK markets were in focus this week as the pound crashed to an all-time low and the bond yield surged to the highest in more than a decade, sparking talks of emergency action by the Bank of England. However, the calm brought by the Bank of England's decision to buy long-dated government securities to stabilize the turmoil in markets was proven to be short-lived. Since the alarm bells of an almost certain recession and a central bank determination to keep rates higher keep ringing louder and louder this week. Treasuries extended their worst bond slide in decades as a dollar gauge rose to yet another record. Economies around the world are slowing more than expected. Undoubtedly, Russia's war in Ukraine is driving inflation and raising the cost of energy. The Organization for Economic Cooperation and Development scaled back its projections of growth for the G20 countries next year. Its expectations showed that global economic growth would be a modest 3% this year and an even weaker 2.2% next year, down from 2.8% a few months ago. Meanwhile, the Fed officials remained adamant on further monetary tightening. Cleveland Fed President Mester said the U.S. Central Bank, which has already raised its benchmark interest rate by 3 percentage points this year, has got to keep going to restrain high inflation. So let's see what else is steering the market. So again, the dollar is touching the sky, and obviously if the hawkish Fed officials' speeches continue to send asset markets lower, the greenback can leg even higher. Oil finally rallied slightly after recently touching its lowest since January. The minor boost hinges on OPEC's action as the allegiance faces growing calls to cut oil production. West Texas Intermediate crude rose 0.3% to trade around $83 a barrel. Moving forward, the U.S. merchandise trade deficit narrowed 3.2% to $87.3 billion in August, to the smallest since October 2021 as both imports and exports dropped, suggesting a tailwind for economic growth in the third quarter. Meanwhile, the orders for business equipment at U.S. factories increased 1.3% last month, the most since January, reflecting broad advances across categories even as interest rates rise. Applications for U.S. unemployment insurance dropped by 16,000 to 193,000 in the week ending September 24th, unexpectedly to a 5-month low, led by a sizable decline in Michigan, suggesting robust demand for workers amid economic uncertainty. So, how's the market doing? Well, let me tell you. U.S. home loan costs continue to soar, risking a more pronounced downturn in the housing market. The Market Composite Index, a measure of mortgage loan applications volume, decreased 3.7% on a seasonally adjusted basis from 1 week earlier. The refinance index dropped back by 11% week over week. The seasonally adjusted purchase index decreased 0.4% from 1 week earlier. The recent release of home sales in August painted an optimistic picture. It showed a staggering 28.8% increase from the previous month, bringing the total annual pace to an unexpected 685,000 from 532,000 previously. Let's wrap it up. Over the past month, Fed officials have consistently demonstrated their resolve to push inflation back down to the central bank's 2% target. Chair Jerome Powell called the commitment unconditional. But now comes the difficult part, sticking to that commitment as tighter monetary policy restraints the economy and may even put millions of people out of work. So, will the Fed stay on the same course? If it will, it's going to be a long, hard road, which raises doubts and which need time to be resolved. So, that's all we have for this week. Stay informed with our news, and our trading desk will keep you updated with pricing incentives. Happy Friday, everyone, and have an awesome weekend. Buffy out.